Hello, my name is Shehu. I am an investment researcher and fund manager. I was the most viewed writer on investment topic on Quora, and top writer on business topic on Medium. Investment is, of course, a topic with a wide range of topics. In the lecture, I would like to talk to you about individual investment, which is suitable for ordinary investors. What is an ordinary investor? There are two most critical criteria. First, investing is not your full-time job. You have other careers to do. Second, you don't manage the money of outsiders except yourself, or at best take care of close family and friends. As long as you meet any of the above 2 points, this course will be suitable for you. Since entering modern society, investment has been closely related to every adult in the world. The physicist Newton, economist Keynes and Nobel laureate Daniel Kahneman, they are all active stock investors who need to manage their investments to support their academic research in daily life. Of course, as we all know, although Newton and Keynes are academic leaders, their individual investment results are not good. This shows that no matter who it is, you need to learn and practice individual investment as a special ability. Moreover, whether you take the initiative to buy stocks and funds, even if you just go to the bank to deposit, or loan to buy a house, in fact, you actively and passively participate in the investment process. In our life, we always have to face the problems of education, healthcare, providing for the aged and improving the quality of life. Income from investment is one of the most important means to solve these problems. Modern people can't help but care about making money. So you can see that there are countless courses, books and experienced people on the market telling you what to do and how to make money. But the key question is, why can't we do it well? Why do so many people still suffer losses and failures in their investments? The biggest reason for this is, the vast majority of people put their learning and investment efforts in the wrong place. What does that mean? It means that you have been learning to invest for a long time, but in fact, you have put the cart before the horse. Give me an example. When it comes to the stock market, we all feel that the risk is very high and fluctuates wildly, and we will lose money if we are not careful. But is that really the case? If you stand high and take a long view, you will find the following conclusion. In China's A-share market, from the end of 1994 to the beginning of 2019, the Wild Whole Index, which represents the whole market, it grew from about 380 points to more than 3,500 points, with an annualized return of more than 9%. If you start investing in 2005, the bear market, your annualized return for more than a decade will exceed 20% in 2019. Let's take a look at the American stock market. In the 200 years from 1802 to 2012, stocks value changed from $1 to more than $13 million. And not just stocks, including bonds, gold, real estate, and other assets, have drawn a gorgeous upward curve during this period. If you don't believe it, you can take a look at the picture below. It comes from Stocks for the Long Run, a classic that has been repeatedly quoted in the investment community. What does that mean? It shows that many people ignore an essential fact: the entire investment market, whether it is China, the United States, or most other countries, has been rising. Even in the A-share market, which we consider to be unpredictable, its long-term returns are amazing. Not to mention real estate and bonds. Therefore, the success of investment should have been a straightforward matter. It should take it for granted that we can make money. So back to our opening question. The market has been rising, so why are many people's investments still unsuccessful? My answer to this is because we have made too many mistakes on our own initiative when the situation is good. In other words, what we lack is not advanced knowledge of finance and investment, but the ability to circumvent mistakes and avoid big potholes. Don't underestimate the impact of making mistakes in investment on us. Not only you, but even the world's top investors will make a blunder on these issues. For example, in the internet bull market, a period of easy money, how Julian Robertson, the founder of the Tiger Fund, and Soros's partner, Stanley Druckenmiller, lost billions of dollars. How did the famous economist Keynes change from a loss-making macro investor to a profitable value investor? How Michael Burry, the protagonist in The Big Short, became a hero in the subprime crisis, but ignored the over-the-counter restrictions that we all had, and he was finally forced to close his own fund. Similarly, for us, there are many potential mistakes, such as: in the face of the bull market, should I in? When on earth should I enter the market? Can we trust the high-return financial products recommended by our friends? Is it doomed for me to take high risks if I want a high return? We like the products and founders of a company much, and we are optimistic about the company's development, so can we buy its shares? As an ordinary person, whether or not to buy overseas assets or funds, is it necessary to invest in regional diversification? Behind these problems that everyone has, there are hidden reasons for the failure of our investment. The investment trip was originally a large, spacious and flat highway, but we deviated from the fork-in path due to various mistakes and temptations. If we can avoid these most common and fatal mistakes, the success of investment is almost inevitable. So the purpose of my lecture is to take you to the broad road of individual investment. To be honest, I know that the people who come to my lecture naturally hope to invest successfully and increase their wealth. But I want to say, the goal of my lecture is not just to help you make money. In the final analysis, for most people, making a good investment should be a tool and means to achieve a happy life, not the ultimate goal. So what I really hope is not to help you become an investment expert or a master, but to help you do an excellent job of investing in the right, easiest and most efficient way when you have better life security, when you gain knowledge and self-confidence in the process, and when you can take care of the people you care about most, then you can pursue your life ideal and meaning more intently. This is the real purpose of our life.